Sentiment is now hitting rock bottom. Where does the market go from here? Today we'll break it down for you. My name is Paul Barron. Welcome back into Tech Path. I want to thank our sponsor today, and that is iTrust Capital. If you are looking to lock away your crypto and do it for more long-term holding, well, a crypto IRA is one of the ways you can do that. Visit itrustcapital.com. You guys can buy, sell all of your crypto and, of course, gold and silver over there with your IRA once you're in the account. So you can't transfer crypto in, but you can start acquiring it and get in on that. Use our link down below. Let's go over to where the market is right now. A lot of negative input right now. If you look at the CoinMarketCap crypto fear and greed, holding at 20, quite possibly the lowest we've ever seen right there. As you can kind of see, it's starting to go into no man's land. This is an area that continues to decline. If you look at fear and greed from CNN, there, of course, 10 extreme fear now in the market. And if you scan down here, even if you look back in, say, November of 22, holding it around a 23 on fear and greed versus where we are right now, holding at a 21. So pretty significant situations brewing right now in crypto. Obviously, we'll look at the traditional markets. This is the fear and greed on, securities. Still holding it at 22. People are still concerned. I think most of this would be driven, obviously, by Trump's tariffs and also just the macro pressure that inflation is playing, how the Fed is going to respond. It's getting into a little bit of a very questionable strategy going forward. Many people think that this whole Mar-a-Lago Accord idea of getting a weaker dollar and a stronger marketplace is still part of this. I'm still yet to see the play out. However, you have to think about what Trump does and how he architects his deals. I'll talk about that in a minute. Last up was our own MSI 2.0. This is our dashboard. Overall sentiment has fallen from, if you look at where Bitcoin Watch was back in just the end of January, it was at a 58, and it's holding right now at a 50. So very, very significant. And that's with Bitcoin only coming down to around 82, 84,000. So a big deal overall. DeFi, of course, dropping off right now. Meme coins getting a big drop. Overall, all coins continuing to decline. Pretty much everything out there in terms of crypto sentiment is down. Now, the question is this a good time to say, okay, well, it can't go much further than this. Is this an opportunity for some of these tokens to get an entry that I've never had a chance at before, especially for those of you who've never been in crypto before? So this is an interesting time that could perk up. If you look at Nvidia, revenues up 80%. Obviously, demand on AI chips. Couple of points within the article right here. 39.3 billion for the quarter. This is up 12% from its previous quarter and 78% from the same quarter last year. Big deal there. AI is advancing at light speed. We already know this is going to have a big impact, I think, on crypto in general, because there are some other factors that play into this. If you look at the finance chart here, 3 years ago, gaming was Nvidia's biggest market. Now, of course, that has completely changed now when you look at Nvidia right there in comparison, data center revenue versus gaming revenue. Big difference now, guys, big difference. So obviously AI, big part of this going forward. I've got a clip here from Jensen Huang, who is going to break down a little bit more about DeepSeek and why this was good for AI. Take a look.
We thought computation, the amount of compute necessary, was a lot last year. And then all of a sudden, reasoning AI, DeepSeek was an example of that. ChatGPT 4o is an example of that. Grok 3 reasoning is an example of that. So all of these reasoning AI models now need a lot more compute than what we used to expect.
Let me stop you there.
That puts even more load.
Because some people took DeepSeek to mean actually that you need less compute, right? Because the initial report was that they were doing more with less.
There are 3 phases in how AI works, how AI is developed largely. Number 1 is pre-training. It's kind of like us going through high school. A lot of basic math, basic language, basic everything. In post-training, you might get human feedback. It's like a teacher showing it to you. We call it reinforcement learning, human feedback. And that computation load could be 100 times more than pre-training. And then here comes inference, the reasoning process. Instead of just spewing out an answer, when prompted, it reasons about it. It thinks about how best to answer that question. All of this is just causing compute demand to go sky high.
Okay, so you can see the variations of how technology, when you look at how it compounds over time, especially with AI and the use case and need, NVIDIA could still have a large percentage of this market, obviously going into maybe even more advanced chips as AI starts to advance itself. If you look at Rendoshi, he's talking about next generation of AI is going to need 100x more compute than the older models. This is talking about what Jensen was talking about there. Stack tokenized compute and chill on render. Render is, of course, one of those tokens that we've talked about here on this show for quite a while that does decentralize compute. And there are some opportunities here, I think, within this. Render is kind of tied to what's happening with NVIDIA. Other things that I want to jump to, of course, 21 shares sees NVIDIA earnings and Friday's PCE data as a potential catalyst maybe for a Bitcoin boost here. And if we get a softer PCE, which is what's anticipated, it could be a little bit of a signal here with a continued AI-driven demand. A positive PC inflation could create the perfect macro environment for Bitcoin, not only reclaim its previous, but also possibly start to push its way back up to an all-time high. 150 is the question mark, of course, that everybody's looking at. Guidance on stablecoins is going to come, that is for sure. And of course, you've got institutional allocation that's still moving into the space. So I think with those, that is a good kind of triple threat of what's happening in the category right now. And remember, it's always darkest right before the dawn. So those are the kind of things that I think the market is faced with right now. Other factors that are out there right now, you have the U.S. government-backed stablecoin that is starting to be developed here within Wyoming. This could really change the narrative around stablecoin usage at the state level. This has not been decided, but today there is going to be a directive coming out of Wyoming that will at least point to negotiations. And what that means is they're going to get the go from their commission to basically go out and start negotiating with Avalanche, SWE, and others. So my anticipation is they're going to use this as kind of bargaining chip to really kind of get the best deal. And it's going to be good, I think, for one of these chains. So whether it's Avalanche, whether it's SWE, this is yet to be determined, but I do look at some very good opportunity for this going in. Now, where it starts to break down is when you get into the tariffs side of things. And this is why I think the market has been responding like it has. So Trump, of course, announced the 10% additional tariff on Chinese imports. Here we go again. So this is a problem with the Chinese trade deficit that does exist. And I think a lot of people forget how much of a trade deficit is with China. And I think Trump's position is he uses this as a way to negotiate. And my anticipation is that a lot of these tariffs most likely will get walked back because of some other, scenario that plays out within the negotiation where China gives up something else, possibly that can be able to onboard more jobs here in the United States. So watch for that. Other things you got to look for is, of course, BlackRock. They're selling about 5,000 in Bitcoin, but that's really just investors that are in the ETF that are dumping Bitcoin worth $423 million in the last 24 hours. Largest outflow on ETFs since this thing has launched. So here's the chart on iBid just to show you the total spot ETF net inflow and net flow, I should say. This is the deepest we've ever seen it go. So it definitely is a situation for Bitcoin in terms of the ETF side of things. This also could mean that we've got other ETFs that are brewing that maybe some of these institutional investors are possibly looking into. But if you look at this right here, since the trade war worries began on the 20th, this is the thing that everybody's worried about with the tariffs, crypto markets have erased $800 billion. So if you look at that chart, EU tariff rumors, boom, slack. Trump says 25 on coming for the EU, another big bump. So you can kind of see the market, especially in crypto, does respond to this. Now, again, just remember, art of the deal, the negotiation tactics of Trump, they call it kind of a blurt. He just blurts these things out. And in many cases, he backs away from them very quickly. And I think that is something that just the market has to get accustomed to. There's a handful of analysts that have already started to kind of go down this direction, is that don't believe every single word literally coming out of his mouth, because he is using this as a negotiation ploy to try to play into it. Now, if he is not, and it starts to continue to put pressure into the macro environment, then you've got a problem. And that is something that I think everybody is trying to put their head around and get a framework. On good news, you got to look at this tweet from Eleanor. And what they're getting at, of course, is what's coming out of the SEC, which is a lot of cases being dropped. I put a tweet out not too long ago that says all these cases are going to get dropped. Sure enough, these are happening. Robinhood on Monday, Uniswap on Tuesday, Gemini on Wednesday. Then, of course, we had the SEC dropping their case on Consensys. And just as a reminder on this, the agency alleged that the company made more than $250 million in fees by offering staking and on digital asset swaps through MetaMask. And of course, that's the whole point. Now it looks like staking is going to be approved, and next up could be the Ripple case being dropped. So what's next? Could Friday be Ripple maybe getting released? That'll be an interesting one for sure. Solana ETF is listed in the DTCC. This essentially is the architecture in which ETFs are transacted, meaning you got to get prepped for the actual modifier in terms of how these ETFs trade. And the DTCC listing shows and potentially could be an early indicator here of the Solana ETF going live. So that's a lot of good news right there that could still start to surge the market. And are we at the bottom? Do you think we've hit rock bottom right now? Drop some comments down below. I always love to get your feedback. If you guys are not in the Diamond Circle, get in right now. It's a great place to get additional content. And also join the Telegram group. It's our free Telegram group. I'm in there every day chatting with you guys. Love to talk with you. Get a great insights from you guys too. I'm loving some of the things you guys are talking about in terms of where you think the market is going. Join down there. Follow me out on X, @Paul Barron. We'll catch you next time right here on TechPath.